Hello. We're going to test the microphone here for a moment and see if everything is coming through loud and clear. And we're going to kill the music in just a minute and get started. So let me know in the various chats if you can hear me okay, and we'll get rolling shortly. Okay, let's go ahead and get the music under control. Does look as though, yep, you can hear me okay? Excellent. Okay, let's get this started here. Hello and welcome to Macro Mondays here on Landy's Crypto Corner, where we even take a look at Bitcoin and traditional markets on the longer term timeframes and weave that into our daily analysis. Currently, you are looking at the volume map for the move up that we had previously plotted in prior streams, and it is working exactly as expected to this point. So now let's actually go and take a look at Bitcoin on a more macro time frame, in this case the weekly. And this is the Bitcoin in 60 seconds chart that you typically see in the shorts videos on YouTube and other various platforms like X, maybe TikTok, although I've been having some trouble with them. It seems as though they don't like Bitcoin content anymore. So in this case, we can see that Bitcoin in the early goings here of this weekly candle has come down and tested in and around that monthly support area again at 27,200. Now, if Bitcoin does break through this downside support area at the monthly, the next big area to be aware of is the next weekly support down here, and that is coming in at 26,750. That's this low over here. And then if we do see that area, if we see that area closed below, especially on like a daily time frame, even, man, I'm having trouble with English today. I would be targeting somewhere around the lower first here, which is coming in at 26,200 to this weekly area. And this weekly support is the prior weekly low as compared to the most recent weekly low, and this is coming in at $26,000. You'll also note that I have a note here that says that this is the weekly momentum pivot. So if we go to our other chart for just a moment, and we put this on the weekly time frame, yes, we will revisit this and clean it up a bit in just a moment. But if we look at the weekly momentum pivot, we can see that this is the $26,000 pivot, and that just happens to be that prior weekly low. So what does that mean? Well, that does mean that if this area is closed below on a weekly time frame, and that would have to be, a weekly specifically, we would get an initial cross down, and initial targets to the downside would be this daily support area where the wicks are coming in at around 25.1 to 24.8. And if that area does break down, I would be targeting somewhere around the weekly lower second at 25.5 to the weekly support just below, which is this high over here at around 20. I'm sorry, that's not 25.5, that's 24.5, and the weekly just below at 24.3. Of course, that would open up further downside targets on the board for us here at the next weekly at around 23.7 to 24K. And of course, the ever important monthly is down there at 23.3. If that area is breached and especially closed below on any of the higher term timeframes, I would be looking to the very low $20,000 region, possibly even a retest of that major low down there in the 15,000 to 15.5 to 18.5 region or so. Now, if Bitcoin does recover above the basis band this week and this overhead weekly resistance at 28K, I would target a run up to this daily area at around 28.4 to last week's wick high at around 28.6. That would obviously open up the next big area here. And this is a weekly order block. It's also a daily low up here at around $29,000. Then we have the breakdown area overhead from this top that was put in at around 29.4 to 5 by the upper first standard deviation of the Bollinger Bands on the weekly chart here. And above there, I would start to target the next weekly here at 30,300. Now, I didn't mention this in the 60-second video, but if we do see a closure above the upper first and this daily support resistance area at 29.4 to 5, I would strongly advise people to really be looking further up unless we see some sort of weakness in this area that results in a weekly high. Now, of course, this is all predicated on Bitcoin even pushing through above last week's wick high. But this would open up not only the weekly above at around 30,300, but it would also open up the upper second standard deviation around the highs at 31.5 to that overhead resistance at the daily, weekly, and monthly area at 31.8 that was swung back here on the most recent higher high. So it's all about context. If we do go down to the daily and take a look at price action as it relates to the Bollinger Bands here, we can see that Bitcoin is beginning to lose that upper first standard deviation of the Bollinger Bands after testing in and around this weekly. You know, you're going to see a lot of like, look, it's a double top. It's going to come down all the way back to this low, and it very well might, but it's still got to get through some pretty solid support here. You can see multiple dailies throwing wicks at this monthly at 27.2. And we can also see the basis band of the Bollinger Bands coming in as, well, initially it should be seen as support. And it's also coming in right below that area at 27,100. So I would give it some room if you do see Bitcoin fall a bit further and start to lose the daily and monthly support zone down to that basis, probably around like $27,000. It could even dip below there as long as it's closing back above that basis and or it swings it and deviates it. It's just fine. In terms of looking for further upside. If we do see a closure below the most recent wick lows, though, I would be looking a little bit further down, even if it's only on a wick basis, to this next weekly down here at 26,750. And that, of course, would open up this lower first standard deviation around 26.5. And, of course, then we have that weekly down there at 26.2. So, you know, just keep everything marked on your chart to these downside areas if you do see specifically daily closures below this monthly support at 27.2. So, and you can give it some room to about 27 to 27.2. And yeah, I mean, below there, then it's right back to that weekly. And of course, that is the weekly momentum pivot at $26,000 just by this low over here that came in slightly above there. This weekly is technically at around 25.9, and this most recent low is $26,000, which is why you're seeing that weekly momentum pivot come in right around $26,000. It's because of this wick low here. If we did see closures below there, you know, I would look at this structure right now and the position of the bands as this being a very solid support there by the lower second standard deviation on the daily. With the weekly support right there. But if we do see compression of the Bollinger Bands and then we see the Bollinger Bands somewhere around these lows and we see expansion down, that's where, you know, it does get a little dicey and where I would possibly be favoring further downside expansion should we see this weekly at 26K fail. Then I would be targeting the low structure over here at 25.1 to 24.8, possibly lower if that broke down. I'll be quite honest, though. Any move down from here on the daily is mean reversion. Typically, when we see mean reversion that goes past the basis, if that were to happen, the big target area is that weekly there at 26,750 to the lower first at around 26.5, and you can give it room down to 26.2 as we we're looking at on the weekly there. So that's primarily the bulk of the Bitcoin analysis for today. You know, we do have to see how things play out throughout this week into next week. But as it stands right now, you know, does it look a little toppy on the daily? Sure. You could make an argument for that. In my opinion, it's looking a little bit more like a consolidation on the daily, especially when taking into context that weekly. We can also see that in trend, we don't currently have any bearish divergence. Now, that being said, you know, there is the possibility for that to form. We can see that you know, Bitcoin has lost the moving average here. Not a big deal in my opinion. In fact, if it does continue down, we might see a test of this midline here. If this doesn't just end up being a deviation of that moving average there. And the midline is lining up with areas of interest. Scale midline is right there at 27,100 or so. I would look at this as probably coming down to around that $27,000. And again, that falls right into the, you know, that would be falling right into the areas that we just spoke of at around 27 to 27.2, where the monthly is, where the daily basis band is, and all that stuff. In fact, the scale midline here is where the Bollinger Band basis is. So we have confluence there with the midline and the basis band. So, and when looking at daily momentum, we can see that the momentum pivot for today is currently 27.7. So if we did see Bitcoin close below there, we would get another cross down. Again, this is not a signal in and of itself of anything really significant until we see a breakdown on a close. And I'd be cautious if you are super bearish, mainly because of that weekly and the position of the Bollinger Bands on the daily and weekly as it relates to those price levels. So I would, you know, you might be able to get some nice trades into the downside if that were to happen, but I'd exercise caution. That's really it until we saw something major really break. And in this case, we'll go take a look at the volume map that we've created for this particular move up, and with our nice deviation at the highs there. So the volume map is all the high volume candles that were setting the initial candles that set the low, and then the high volume candles that set these different highs. Now you can see that we did not have very high volume here, so it was not marked. We did have higher volume here with deviations. You're going to see a lot more deviations on this map. Came back down to its base of support down here, and then popped back up. We see high volume on the actual highs here. Came back down to the support here, tested the top side, found support, headed on through, put in a nice high volume candle, deviation right back into this high volume candles range. It has been bouncing around. Now, for this particular volume map, it's been working quite well. You can see every time that we get a move down to this higher volume move up, or this expansive move up, after the consolidation, we see that we've dipped in here 1, 2, and now 3 times. Now, you can say that this was tested here, and maybe we've got 4, but dipping into this area, we've got a little bit of a consolidation dip into that liquidity, another spike into that liquidity, and now we've got a third spike into that liquidity after finding initial support on the top side of that. So if we did see, another move back up to this consolidation, just be aware that there is now some built up overhead resistance. So if we do see a reclaim of around 27,800 to 900, I would be looking back to 28K, possibly a run to this most recent wick high up here at around 27.2. And with that said, I do want to note, we can go back here on the daily, that this wick high over here from the previous move into this weekly resistance is at around 27,200. It is actually at 28 200, not 27,200, 28,200. In this case, this wick high is coming in at 28,184. So that area has been swung quite a few times. If we did see it start to get closed above again in some of these lower term time frames, specifically in this case, this wick high here in that 27,200 area, almost 27,300 here, then I would look for another run at around 28.6. And that would start to open up the possibility that, of course, if it breaks, that we're going to start hunting around $29,000. So another way to look at this is also to, we'll go ahead and turn off the volume map here. And we can look at this bar right here on an hourly time frame. So if we look at the bar up here that's kind of defining this particular range, we can see that the high volume bar is this guy right here. So top to bottom of the wick here, we can mark, and we can get a bit of a high volume range. You may note that the low bar from this particular move is down here. So we can mark this guy here. So we've got this high volume low bar, and we've got the high volume high bar, and that is, basically encapsulating this range. And you can see how this kind of plays very simply with, we have the high volume bar set right here with the wick high. We can see that there was a deviation above, closed back below. We did start to get a close above, which typically would indicate a move a little bit higher in the next couple of candles. That didn't happen to work out in that fashion. This was a very, very low liquidity bar above here. And if we aren't seeing any really high liquidity, then we're probably favoring a bit of a failure there. That put in a high, came over here, marched down to the low side here by that candle that set that low. And it's just kind of floating around within this range. We can even pull a fib on this. This is something that you might find helpful in some cases. In this case, we can see that the 50% of this move from the low to the high, or high to low in this case, for mean reversion, we can see that the 50% of this range was holding things up. We had the candle here today, or very early going for me, did bounce off of it. Next candle closed below it, and then it marched down a bit further. It's been finding support around the 191, and we just got a back test, a close open on the 382 here at around 27,600, and then a test straight into that 50% again. So basically testing the strong half of this particular range and getting a rejection initially. So until we see that 50% of this range around 27,731, 27,750 or so, break and close on an hourly, then we can start targeting that 618 around 27,850, 860, and then possibly the top side of this smaller range here. Pretty straightforward stuff. Not very surprising when looking at something like the 4-hour. This is setting up for a bit of a consolidation. We can see the bar that has, the way that the volume kind of mapped out with the 4-hour here as well. So when looking at the bottom side of this particular move up, so the break of this 4-hour high over here, that being this high right here, this is the bar that broke it, and we can move our horizontal raise to kind of encapsulate this range as well. It ends up being a bit of a different range here. If you'd like, you can take the bar that moved things up and the bar on the high as well, and then that can give you a bit of a bias on what's going on, and then you can even check things with a bit of a fib here as well. So you can see that in this case, it did swing around the breakout area here already on the 4-hour, and it tested up to the 786 and consolidated underneath the 618, deviated it, sat on the 50% again, lost it, and then it's down to that 272, 191 area, swinging around these lows, which is coincidentally right around that breakout area from this high over here. So this high over here has been swung, 3, almost 4 times now. It depends on if you take the wick high or the candle close high. If you take the candle close high, you can see that it has been swung around a few times now. And, so far it looks like twice. And when looking at the 4-hour in terms of momentum, we can see that 27,670 on the next 4-hour bar would turn momentum back to the upside here. It's not really in any kind of a critical region. It is in the bearish control region, though. So just keep an eye on that. When we look at the 4-hour as compared to the hourly, hourly is up on any closes above 27,400. That's going to update in about 10 minutes, looks like. So, all right, let's look at the 12-hour as it compares to the daily. 12-hour is downside angled. Momentum pivot is 27,850. So when looking at, the bit of a range that we were just talking about, that would be back above this 50% fib that we were just pointing out here. That would turn the 12-hour back to the upside. Now, the convenient thing about having this 12-hour fib is we can pull from high to low of this entire move on the 12-hour. We can get rid of those horizontals for now. And we can note that on this most recent move up, Bitcoin is currently finding support on the 50% fib. So this can also give you a bit of a bias. We can see that this was also the 12-hour breakout. So there's the high over here that was rejecting around what we are currently pulling as the 50% fib. And, down to that 382, which is 26,988, so $27,000. Again, that's the daily basis band, swinging right around that monthly level at 27.2. So there is a zone right here, which would constitute a technical retest of the move of the move up, a higher low structure of the move up rather on the 12-hour here. So this is first and foremost, it is a consolidation. Yes, it's a lower high. So if it breaks, this wick low on a close at 27,160, then I would be favoring a test down further. But until I saw something like this again, what is this area? It's 26K. Until I saw something like $26,000 break down, then I'm not looking for too much further to the downside. I'm looking at this as more of a consolidation. But if we do see a structural change at $26,000, that's where the weekly pivot comes into play, and where things start to look a little less attractive for the bulls here. If we throw on Bollinger Bands, or not Bollinger Bands, sorry, EMAs, which you can find EMA settings. They're built right into the Landy Bands, and the Landy Bands are typically linked. They're free. It is a private indicator, but you can just follow the link to get it. It will be searchable within the indicators section of TradingView soon. I just have some code stuff to work out in there and a few other features that I want to add before actually releasing it publicly. But you can always follow the link in the description for the videos or the first pinned comment of the shorts videos, and you can always get this indicator for free yourself. And it does have a set of Bollinger Bands in it. So you can turn, I'm just not doing well with this right now. All right, so it's got Bollinger Bands in it. It's got moving averages, and it's got the BBWP, which is a volatility indicator built into it. Thank you, Caretaker, for allowing me to use your code. We also have Super Trend there. That was a feature request. And then it's got signals. They're all buried under the style tab right now, but they will eventually be integrated into the inputs area so that you can change it, modify it, do whatever you like with it. But as it stands right now, if we take a look at the EMA setup on the daily, we can see that I generally favor using someone else's very popular setup here. That could be because of the institutional trading world, or maybe his influence on me. But 9, 21, and 55 are the main EMAs that I have on the chart, along with the two 200s. So the 200 EMA and the 200 simple. I also throw on a 50 simple there. Now, what this gives me the bias of is if we get all of the lower term EMAs above the simples, or all the EMAs above the simples, then we typically hit full trend. But in this case, you can see that the daily is being held down by the 200 simple after regaining the 200 EMA. We can also see that the 9 EMA is above the 21 and the 21 is above the 55. And in today's candle, we back tested around that 21 EMA. So because we do have a 21, we have the 9 over the 21, over the 55, over the 200. And the 200 is, again, it's right in that ever important area, right around the basis band of the Bollinger Bands, which is the 20 simple, by the way. Which also means that the 21 and 55 are above the 20 simple. You want to see the 20 simple leading that 55. But in this case, we can see that, it's right in that $27,000 area. So we're getting all kinds of confluence for this. I do think that once we see the 200 EMA broken on a close at around $28,000 here, I would expect, maybe shorter term time frame retests of it, but I would expect, things to start working their way up to this consolidation before the breakdown up here around that $29,000 to $30,000 wick, 30,300 or 200 in this case, wick high around that weekly, and then eventually the highs overall of this particular move up over the past, when did this start? I'm a little tired, so my brain is failing me here. December of 2022 is really when it got rolling on that bit of a higher low on the daily, and then the expansion up. So in this case, we've been almost a year. We're going to be coming up on a year pretty soon. This December, if it can hold up here around the highs, we might see this area break sooner than later to the from the highs. And if it doesn't, then we're probably in for a longer form consolidation in this area, maybe test lower. All right, that's going to do it for Bitcoin. I guess actually we should probably look at the weekly here, because this is an interesting moving average setup as well. We see that Bitcoin based off the 200 EMA again, and we can see that that 200 simple is right there at $28,000. And it is going to be, the main area for, it's actually around that prior wick high. Sorry, it's around that 200 area. So, if we do see price close above there on the weekly, then we're favored to run to the highs. We'll likely see, the 9 cross up over shortly thereafter as well. Right now we have a cluster of EMAs on top of each other, and that would be the 921, and they are leading the 55 EMA currently. So more importantly, you want to distill this down. Bitcoin is trapped between these 200 simple above and the 200 EMA below. So if the 200 EMA below starts to fall apart, there is a 50 simple down there, currently coming in at $25,000. If we did start to see things work their way down there, I suspect this would be closer to around the lows, around 25.1, 25.2, maybe 25.5 area. If Bitcoin kind of goes sideways, if we see a nuke through the 200 simple, it's coming in right around the lows. That's where we get that low retest. And then we see where the weekly closes. All right, so let's go ahead and get rid of this in terms of moving averages and throw our bands back on. Get the bands back together, and let's go look at traditional markets. We'll take a look at Dow to start. Dow is up. Dow has put in a nice low. And again, it's doing kind of the same thing that we talked about on Friday. And that is trading up towards the Breakdown area, it's already reclaimed this order block candle, at least the low side of it. The next big area would be 34,666. If it can regain that, then I'd be looking somewhere around the basis band here at around 33, 850 to 33,900 by the daily Bollinger Band basis. Above there, it wouldn't be out of the question to go retest $34,000 at this low. If it can beat that out, then we're looking at 34,350 to 34,400, 34,500 by the upper first up here at that now overhead resistance. So that'd be primarily what I'm watching for this week. If Dow does reverse on the lower term timeframes and lose the lower first standard deviation at 33,340, then I would be favoring a move somewhere back around the lows and lower second at 32,760 to around 33,000 at the actual closing low here, which came in at $33,002. If we were to compare this to what's going on with the weekly, we can see that the weekly spiked the lower second standard deviation of the Bollinger Bands. And if it does close back above the wick high by the week end, or Friday, I should say, which is 33,557, I would still be favoring a move back to that lower first if it didn't already get there at around 33,725. And then a move to try to set a low at around 33,900 to 34,000. If it does that, then we can start targeting the basis around this closing low at 33,350 again. You're seeing the confluence here, right? Up to this overhead resistance here, where there is a weekly high around that 34,400 to 34,500 area. Above there, we're targeting right back to this lower high in the weekly by the upper first at around 35,000. Pretty straightforward stuff. The momentum pivot for the weekly is going to be 34,500, so it's pretty far up there. But if we see a low being put in, it's likely that this gets a nice bullish reset over the coming weeks. So if we do see a low put in this week by Friday close, then we might see a little bit of continuation to retest these current lows, maybe throw a wick lower, but I think the move would start to subside and shift on the weekly time frame. We'll just have to watch it pretty closely. I think those looking for the big bust to the downside might be waiting a bit longer. When looking at NASDAQ, it's holding up much better than Dow. It has already regained the support resistance zone that we had after a deviation of this low over here at the 14,560 area. It did regain in Friday's candle both this 14,700 to 14,900 area and the basis band of the Bollinger Bands, filled this gap over here, and it's probably going to try to make a run for the upper first by the breakdown candle over here, at least on the open at somewhere around 15 to 15,200. So above there, I'd start to, it's already at 15, so 15,200, my apologies. Then I'd be looking at the upper second by this lower high, somewhere around 15,400 to 500. If it does start to lose the 14,700, I would look back to that lower first at around 14,600 to that low that was just put in around the lower second at around 14,400 to 14,360 or so as it currently stands. But this is going to close and start to curl up towards this low, and I would expect it to start heading somewhere around the 14,500 area thereafter. When looking at the weekly, we can see that this has already set up a low, and it bounced off of the lower first. And this was something that we talked about quite a bit. Lower first, lower second was the area on any lower high up here. We saw the lower high put in and confirmed, tested down to the lower first, and moved right back to the basis band. So the basis band is at 15,000. If it can start pushing above, that upper first is the bias, and that's somewhere around 15. 400 to 500. So I would be looking there, and higher if it can close above at around 15,700 to the close open up here at around 15. That would be 15,775, 15,800 or so, and then come back to it after that. Now the weekly momentum pivot for NASDAQ is 15,400. So keep that in mind as we head on throughout the week here. When looking at SPY, SPY is looking much like NASDAQ, a little bit stronger here as it's regaining or trying to regain this support resistance area at 430, 432 by the basis. Of course, there's that wonderful trend line that, it's basically a meme. This is volatility revert back to the mean on the basis band for the daily at around 433. If it can push above there, and especially above this open at 435, I'd favor a move up a couple of points to 438 to 440. Above there, look into that upper first around 442 to 445. And above that upper first, we're looking to the highs here around the upper second at around 450, possibly a move above if it can make it there. If we do see the lower first dropped at around 425, I would favor a move to the lower second around 415 to the lows here at 420. And I was really disappointed at first when we got the initial move down, because I'd been calling for 420 for a while, and 420 did eventually get hit. I was a little disappointed back here at the 422, but we ended up hitting that target at 420. And there was a lot of confluence for that target as well on the longer term time frames, as well as this close open right here that got spiked or did not get spiked. 415 to 420 was that area. Where was that 420 low coming from? That might have been a more macro time frame. It was the close over here. And this gap fill area down here, which was, to be fair, already filled, maybe not substantially because of the little gap up above it, which was the 415 or 420 to 425, 422 actually. 420 to 422 was that gap. Kind of tested in and around it, got a few fills from it, rejected, but then gapped up above it. Now that has been filled, and daily's looking up above 424. 40 right now, so 425 basically, and then the weekly will turn up on any closes above 446. So something to watch coming into Friday's closure. If we do see a weekly low set here, which it's a little bit easier to see a weekly low being set on SPY, is any closes above 432.48. Right? Yeah. I'm sorry, 432.27. My apologies. Then we would see a low set on the weekly, and that would look pretty good to go test up further to the basis band here at around that 440 area that we just talked about as it relates to the daily. Above there, we're looking to the upper first, and that's around 447, 448. Above there, we're looking to this last high at around 450 to 452, and of course above there, we're looking to the actual most recent higher high there at basically 455 to 460 at the actual high here. Above there, we're looking for expansion and a run to the overall high, and possibly opening up the door for new highs. This setup was not a setup as it stood on the first pass to the downside here to 420 on SPY. The way that the bands are positioned, this was never the world is on fire, everything's, well, let me take that back. The world is kind of on fire, but in terms of the market is on fire to the downside, it's all going to fall apart. No, if this is going to be like super uber bearish, you would have to see a bounce off of here and or a close below the lower second and third that bounces up to more lower highs, begins the consolidation, and then starts closing and getting expansion to the downside. This is not a setup for a fall through this support area over here. I was seeing a lot of 415 is going to drop, it's 400, 390, 370, 350, so on and so forth. It's just too early for that. Even if it is going to happen, we need to see more of a weekly consolidation structure and then closes below the lower second standard deviation that lose, of course, now this most recent wick low at 420. If we did see a rejection at like the basis band around 440 or the upper first around 450 on the weekly that puts in a decent 3 candle high, then we look back to this low like, okay, the bands would start to do what they're doing now, is get that nice squeeze on them. And if we did see a break and an expansion to the downside below the lower second, that also takes out this low and, probably reclaims some of these, bearishly reclaim some of these highs, then we're looking much further down. Then we're looking to, the 400s to this low down here at 370, 380. But this was never that setup. And all those who were getting super bearish on the move down they had bear goggles on. And and I would caution even the bulls to the upside that, SPY's got work to do. Anything below 460, 450, 460 at the highs here, below that upper second around 460, it's a consolidation until proven otherwise. And then we come back to it and see which side gets expansion. Right, the upper second or the lower second. And in many cases, you'll see initial expansion or you'll see a grind up against either the upper second or lower second anyway. So we need to see over the course of this month, October into November, we need to see how the bands squeeze with the volatility. In this case, increase was the pull away from the basis band to the downside. If we start seeing it close back in and around that basis band, we're going to see more likely a little bit of a cool down to possible re-expansion. I also want to note that the current look on SPY, this is going to be true of NASDAQ, and I believe Dow as well. We can go check on it, but there is a bit of hidden bullish divergence populating here as well. And we do want to note where the SMA is, where the bullish control zone is, and where the bearish control zone is. And luckily, this is not a free indicator. This is the advanced RSI from app.chronetrading.net. As you know, I'm a big fan of them. I don't have any affiliation with them. I'm not like a partner. There's free versions of RSI that have these types of pivot numbers as well. You can just search. I'm just a big fan of the guys over there, the developers over there, and Crown himself. I think he's a good dude. But I did want to note where the SMA is. This is a 12 simple. It's at 447. So that area at 448 to 450 that we've been talking about. We also want to note where the bullish control zone is. Bullish control zone is at 456, so 455 to 460, right at the local highs. And then we can see the bearish control zone is all the way down there at that 407. I highly doubt that from the position that the bands are in right now, that would be the most immediate thing to happen. And if it did from here, it's probably a better long opportunity than not financial advice, though. Let's go ahead and look at NASDAQ as it relates to the bullish divergence, which has already been confirmed based on last week's close. So I do want to note again where the SMA is. The SMA is at 15,488. Of course, that's also right around the stock momentum pivot. It's actually a little bit above there, which is currently sitting at 15,400. And we can see that just above there is the bullish control zone. That is coming in at 15,500 around that failed high. And the midline in this case should be noted. That's at 14,489. And the bearish control zone is down here at 13,178. So pretty long ways away. Again, we're looking at the weekly. And when taking into account the scale midline here at 14,489, when looking at where that would be right around the current wick lows on the weekly. So that would be your scale midline. And I suspect that would actually populate some more bullish divergence there, along with the opportunity for NASDAQ to get a higher low in many cases. So if it did come down, I would still be looking at that as opportunity. especially again with the band set up the way it is here on NASDAQ. The outlier is probably going to be Dow because the band setup is a little bit more neutral, but because it moved from the top side of the bands to the lower, upper second standard deviation all the way to the lower second standard deviation and is getting its initial reversal signals off of that, I would say that NASDAQ and SPY being a little bit more bullish probably leads to Dow also being a little bit more bullish, even though it is a bit of a rangy setup for Dow as it stands right now. When looking at the RSI, again, bullish divergence threatening to populate by Friday this week if it can close basically here or higher. Scale midline is going to be, that's a 50 read at around $34,000. Again, that's right in the key areas that we've been talking about. And that would be, basically the area where it needs to set a 3-candle low. So to set that 3-candle low, that is right around that midline of the weekly RSI. We can see that the SMA above there is at 34,622. That is really that's really gonna be regaining this low over here at 30,350 to the overhead resistance here and testing in and around the failed high here by the upper first. I do think that would be that'd be even above there. So we're talking like 34,622. I'm sorry, would it be above there? 34,622. It'd be just below the upper first, but in and around the breakdown area here. This little doji right there. Taking that out, we're going to go test 35. I mean, that's just how price action and order books work in general anyway. Now above there, we can see the bullish control zone is at 36,000, and 36,000, of course, is an area that would be well above the most recent wick highs here at around 35,600 to the actual wick high there at 35,680. So a move to the bullish control zone would be, guess what? A move back to the highs and higher. In my opinion, if we start pushing those highs, it's going to swing higher, maybe even get an initial rejection, but then it's going to be off to the races to the upside with brand new highs and a lot of disappointed bears if that were to happen. 35,000, of course, is that momentum pivot on the weekly. And, it's a little ways away, but the way that NASDAQ and SPY are shaping up in terms of their potential setup, if we start seeing these lows set on the weekly, we're probably looking at the back half of October being pretty strong to the upside. And then it's about whether or not things can actually break to the upside from the current positions. If we were to look at the bearish control zone of Dow, this is going to be a little bit interesting. This is 32,500, right? So 32,500 just happens to be exactly that lower third standard deviation. Now, any closes below there would be taking out this prior wick low, a more macro structure change, in addition to taking out this consolidation area at 33.6 to around that 33.7 to 8 area. And then we would also see, price trading below the lower second, thus opening up this low structure down here at around, 32 to 31.8 and 31,500. So that is kind of the outlook on where things are currently positioned for traditional markets, which I will tell you is a lot more bullish of a setup than it is bearish. Now, can it shift bearish? It would on any failures to the upside, just ranging activity, no breakouts to the upside kind of thing from the most recent higher highs on the weekly timeframes. Now, when we look at what's happening with Dixie, this is where things get really, really interesting because Dixie has put in, a decent high here. It is above this prior resistance though. So we'll get a little bit fuller picture of Dixie here. So I wouldn't, I wouldn't be surprised if Dixie bounced off of this area here at 10, the upper 105 area, as it does trade around 106. Now, the mid to upper 105 area is right around the basis. If it does lose it, and specifically this wick low over here at 105.65, I would favor a move right back to the lower second here around 105 even or so, where you see this white line is coming in. This was this close open low over here that Dixie did struggle with. This was what led to a little bit more of a breakout into this overhead resistance, and it's now got to try to flip it to support around that 105.90. I'd say 106. Just call it 106 around the basis band to this wick low at 105.65. Below there, I would be looking for moves right back to that 105 region, possibly lower over time. The potential though, and we've seen, multiple drives of bearish divergence on the way up, but breaking that out of that area and that structure, and then also breaking overhead resistance, I would still favor another drive of bearish divergence, which would, of course, in-trend bearish divergence would have to be a higher high in this case. Or I would subsequently take continuation of a reversal, which we do see a high put in, but that does mean that I need to see 105.65 fail. So if 105.65 fails, it puts in a low, bounces back up, and gets a continuation drive of bearish divergence, lower highs, lower highs, and then higher highs on RSI. That would change the picture a bit, but that's not what this is painting right now. So just be aware of that. Scale midline for Dixie down here is going to be 105.50. So that would be below that wick low at 105.65, kind of defining this, in my opinion, this top here. If it can remain above bullish, breaks down below, a little bit more bearish, but be aware that it could slingshot the other way as well. If it does regain the bullish control zone, that is coming in at 106.52 right now. The SMA is all the way at 107.45. Again, that would create more bearish divergence or in trend. And the bearish control zone is all the way down there at 104. So 104, when looking at the daily here, is going to be right around, it's actually below the lower second. So I doubt that it gets their first pass. We're likely going to see Dixie bounce in the lower term timeframes before then. But if it doesn't and it starts closing below, then we're looking at expansion right down to the 103.50 support area by the lower third. Now, when looking at the weekly is finally in a position where it's looking like, yes, it can test higher around the upper second standard deviation here. You sell the wicks through. Very rarely do we see closures, especially on expansion like this. When it's already expanded, we just see it was grinding up against that upper second standard deviation there, which is currently at 107.04. It can still run that area. It can even run higher at 107.34 to the 108 area here, which is this wick high in the weekly, which coincides with this close open over here from July of 2022. It was a back-tested wick high on the breakdown here to trend change into this downtrending structure. Right now we have a trend break to the upside, so naturally what we'd be looking for is the areas where it could find support, right? It's currently on the weekly, it would be finding support around this low, which is also where the wick highs came in, which is around that 106.45 area, or 105.45, right? 105.65. Man, get the numbers right. 105.65. That's that daily wick low. If it does drop that area, I'd be looking to the upper first, somewhere around, which is just happens to line up with this high, around that 105.35 to 105 area. That is exactly where I'd be looking. That white line right there. And then below there, we're looking at the next wick high at that 104.69. Nice to the close open somewhere here at 104.22 to 104. And then below there is where the weekly basis band is coming in at 103.50, which again, we have some wick highs there as well. So there's two main highs. There's technically three. It's not really a high. It's like a consolidation low. It's a consolidation before the lower low. And in this case, that's around 105 as well. So we don't need to really mark that one, but you might want to mark the weeklies around this high at the close at 105.26 and this high on the open, close open at 104.22. I would give it some below there. I'd give it some room down to the basis band, and even the 102 area by the lower first. And it, to be quite honest, at this point, it could swing all the way down to the current low. If it makes a higher low, it'd be very bullish for Dixie, around $100. But keep in mind, even though that does paint like, oh, look at the monthly looks fantastic. Well, this is also a consolidation structure. It can run the upper second, but until it starts closing above there, we're not looking for expansion. That's around 111. To the downside, you're not looking for too much further below the wick low here at 99.57. You can get all the way down to the lower second at 98, but until we saw closures below, I wouldn't be looking for expansion down into that downside support area much further. And that does mean when looking at the monthly here, we'll get to the weekly pivot. The monthly is trying to shift back to the upside. 104.46 by the end of the month will complete a cross to the upside. Thus, we've already seen the bullish divergence play out. But beware of that quarterly, man. This quarterly is what I do think would hold things down in and around the current high side structure if it did go and test it around 112 to that high there at 114, 115. I mean, could it get expansion? 110 would do it on the quarterly. That would also be against momentum, though. Momentum pivot is currently 112 and cross down. So if we start seeing 110 regained on a quarterly close, that being the end of the year, then we're looking at the highs and higher around that 112 to 115 area. Possibly it swings higher than that, and then we come back to it later. So when looking at the weekly, which we'll get back into, and looking at the momentum pivot, we can see that it's 107, and it is a weak cross to the downside. So this does tell me that it is possible for Dixie to keep swinging the high area that it's currently in, but above, as long as it's above the 105.65 level. And again, for Dixie, it's very clear criteria for me. Above this spike into the break of resistance and then spike into it as support at 105.65. That is the number. Below there is also below the basis, and that is where I'd look to the lower first area around that 105 support. And then we come back to it. Okay. That's my take on Dixie. And we'll get into gold here. We might even look at oil and go from there. But gold did not meet my downside target. That's okay. It did swing down further, though, from when we were kind of talking around the 115 area. I was looking for a little bit deeper dive to try and test somewhere around where the lower second was. That's my preferred setup, but you got to take what the lower term timeframes are telling you at that point when everything starts to reverse. Nice move up in gold. There was actually a gap up today at open. Of course, we know there's a lot of things going on in the world. And in this case, nice low being set here on the daily, back above this overhead resistance at 1858 with a target of somewhere around this rejected high up here around 1880 to 1875, I think, over time. And that basis band there at 1885. If it can get above there and retest this low at 1885 to the close open here at around 1890, well, then I'd be looking at a retest of this big wick low area at 1893 to 1900. If it can regain that, we're looking at a test further up to, 1910, 1915 area, and then possibly a retest of that lower high. This is mean reversion as it stands right now, though, so just be aware of that. Could it be a major reversal that leads into longer term time frame stuff? Absolutely. Just be aware of this kind of structure playing out where we get the bounce to a bearish reset and momentum on the lower term time frames, bounce on the daily, bearish reset and momentum on the lower term time frames, and then we just get the roller coaster until it actually flips. But 1813 is the daily momentum pivot on gold. Beautiful low, I think, is set in and around that area. If it starts to close back below it, then we're looking at 1800 for gold. Weekly is, you know what? The weekly's bouncing off such a critical area. It is mean reversion. It is mean reversion until, we see a trend break at 1944, 1950 area at these highs over here on the lower high in the weekly. But this is looking like a very strong weekly reversal to at minimum go test this close open at 1890 to 1900. And that's coming in at the lower first, basically to that overhead resistance. If it does, well, which is the wick low, the breakdown wick low. Now, if it can regain, though, the lows here at around 1885 to 1890, I think, that'd be the lower first as well. Then I'd be looking somewhere around the basis band again, around 1915, 1920. And then above there, we can start targeting this lower high in the weekly on the closes around 1940 to 1950. And that 1952 area, we could even see a swing up to the upper first there if it does make it to around 1956. Above there, we're looking to the next set of highs here, around 1960 to 1990, possibly 2000, 1993 technically by the upper second. But if it starts, really aggressively going up that way, then we'd be looking somewhere around 2000 again. Not bad. Now, when looking at like the lower term time frames, there was a pretty aggressive gap up. Obviously, everyone's aware of the narrative regarding what's happening in the Middle East, but a nice big gap up here. What was this gap up? This was from the close there to the actual open. Yeah, we saw about a 0.8% gap up. This is a $14 gap up. That doesn't seem right. Hold on. Where did this close? I guess that is right. So we're about 1.68%. That was right. So about 0.8% gap up. And then we saw oil, of course, take off. This was a bigger gap, but there was oil was already kind of telling you, like, I'm ready for a low. And he closes above 84.01, and we saw Friday's candle close above. Well, in this case, it did close at 82.74, but it was starting to paint the picture of a low being set. This was also a bounce in and around the bearish control zone. This looks like a continuation drive to the top side. I think the weekly is headed down, though, still. So the saving grace for your wallet might be, oh, no. This is a accumulation that looks like a Wyckoff accumulation to a spring. And if that is the case, this is going to be brutal. Regain of the midline. Yeah, monthly's pointed up. This is that bullish divergence coming in. We bullish divergence off the lows. There's a continuation drive to at least the top side. Oh, man. Now, it did retest the basis. If it swings it, and find support at the lower first at like 74, 75 bucks, oof, that's going to look really like a more macro low. Let's hope for our wallets in terms of being able to fill up our gas vehicles that are still the most popular vehicles on the planet, and heat your home and all that stuff. You might want to hope that this crashes down through this low and impulses through that lower second. Of course, if it does, we're likely looking at the rest of the economy falling as well. So it is a double-edged sword. In this case, upper first is around 98 to 100 bucks. So that could be in the future for oil. And then above there, it's right back to the highs at 110 to, the 115, 120 area by the actual highs. If we did see closures on the monthly above the upper second standard deviation, watch out, because oil's going to freaking rocket. So be aware of that. Did silver? No, silver's kind of ugly on the weekly or monthly time frames, but it's setting up in a step down range off that lows, where the lows could become the base. So realistically, somewhere around that $17 base, probably for the longer term. When looking at the daily, I remember it was holding up a little bit better than gold, but it ended up taking the dive anyway, down into the lower second and third, got the expansion, and then now nice bounce off after a lower second retest. Closed right up against the lower first, opened and got above it. Now it's currently trading about 30 cents above. So if it can regain that, I would favor a test up a little bit further to 22.30 to around 22.44, 22.50 by the basis on the daily, if it can hold this structure. If it does start to close back below the lower first, I'd look for it playing around the lower second and the current low a little bit more. And that lower first, again, is at 21.60 or so. If it can close above there, I'd favor a move up, probably to 22 and a half or so. Above there, we're looking to the upper first around 23 to 23.30, possibly a run of this lower high and that rejected spike high at around 23.50, 23.75. If it can make it above there, we're looking right back to this order block here by this low side structure at around 24 bucks to the low side of the 24 area, around 24, 25, 24.50 or so. And that's going to pretty much do it for today. Dixie looks like it's probably trying to put in a high for a little while. It doesn't mean it can't run its local highs and a little bit higher even on spikes. But it does look as though it's trying, like it's, trying to set in that high. It's been on quite a run on the weekly, so pullbacks are warranted in these areas and not, it fit completely with logic. So let me go ahead and turn the music back on, get the 15-second chart up here. So everybody loves a good 15-second chart, right? Or should we do the typical degen 30 seconds? Here we go. We can degen the 30-second chart. And I'll look in the chats and see if there's any requests or questions here before we really get rolling. Let's go ahead and get the music back on to kind of cover for the pauses as I pause and turn it up. And let me head over into the chats here and see if there's any questions. Hello, Jedi, Cheryl, Bobby, over there in YouTube land. I see a lot more people in YouTube, but they're not really chatting much. Maybe just listening in. Do we have any questions over here before I go to the other side? 30-second chart for the win. Yep. All right, let's look. Not sure if we did Dixie. It's by Dixie is typically I'll do traditional markets, then work my way to Dixie and then gold. Try to keep it in that order. I'm not sure what you're referring to, Jedi, in terms of trading what. Cheryl says the way Landy explains it, it seems easy. Trade on paper first. No using the Force, Jedi. Good. Cheryl said she had to go. That's okay. She can always watch it after the fact. Two things. Bobby wants to look at two things: Microsoft and B&B. Weekly, daily. So, well, let's go ahead and take a look at. Let's go look at Microsoft. Let's look at some traditional market stuff here real quick. And we'll just go off the daily here. Yeah, Microsoft set a nice low and a run right back to the upper first here. You know, it can keep going. 316 is the momentum pivot. It's trading around 330. If it can get above the upper first, it's going to run this local high around the upper second, somewhere around 335, 340. And above there, it's expansion to go test the low side up here. That's around 343 to 345. There's a bit of a gap here. Of course, that would be closing above the high there at 340. And then I'd be looking for, tests around 350 and 360, and the high up there around 367 to 370. That is, provided it can get above this upper first on a close at around 330. Then I'd be looking for it to test up around 335, 340. If it does lose the basis here at around 322, I'd look right back to the lower first around 314, 315, and below there right back to the lows around the lower second. So somewhere between there, you take the close open there at 310 down to 305, 306 area by the lower second. The daily looks good though above 316, so it's also playing out a couple drives of bullish divergence. Well, one technical drive here, but it's headed up towards the bullish control zone, which is currently at 336. So that would be the next big target again. That's going to be above the upper first and likely running somewhere around the local highs at 335 to 340. So that would be the bullish control zone test up there on RSI. Weekly coming off the lower second, consolidation, trading up around the basis band. If it can get above it, great. Initial rejection somewhere around it, not unexpected either, around 330. So again, this is all coming up confluent above there. From the weekly perspective, we're looking to the upper first right around that last high at 340. Above there, we're looking right to the upper second around 350. So it's really just coming in confluent with those daily areas. Back below the lower first again at 320, that would violate that, or start to get in and around the invalidation on the daily momentum pivot at 315. Still could save itself, but probably a little bit of a low run, maybe a low retest in and around that lower second then, 305, 315 area. But as it stands right now, I mean, a structure change is going to occur on any closures above 340. So if we see 340 closed above, especially on like a weekly time frame, it's running that local high up there. And likely, this was a higher all-time high, I believe. So yes, it was. I'd be looking for it to make new highs, to be quite honest, if it's back above 340 on the weekly. That's like just straight up, that's logic right now. And 331 is the momentum pivot where it would cross down. It's currently trading around that right now. This is a lagging indicator, and it doesn't have the actual pivot. Let me look at the advanced Stoke up here because it has a projection. So because it just set a low, I wouldn't trust this momentum pivot until we see the weekly close. It just set, it's trying to confirm this low on any closes above 327, and especially get it 330. Above 330, it's going to set this weekly low. That momentum pivot will play catch up and likely stay crossed to the upside and head up. That's really what I'd be looking for on Microsoft right now. That's provided that it can, regain some of these important areas. That big area being 330, go and test 340 above there, probably headed to a new all-time high. And then below 315, things start to fall apart back to the lows. When looking at something like BNB, on crypto, we can take a look at BNB. Do I even have it on here? Yeah, I do. On the daily, it looks like garbage. It's running its lows down here. It's getting slaughtered. It's ugly. It looks ugly. I would not be surprised, let's say, if it started to run this low over here on a close to the wick area around 196 to 180, 183 area. I mean, you could just give it room. I mean, it's currently trading at 206, but below 200, it's probably running this close open area. Close below the lower second, it's going to head down. It's already swung its lows down here in today's candle. So could it reverse? Sure. But if it closes below the lower second, which is at 207.10, I'd be looking for a test, back down around its current lows, 203 to the wick low here at 202, and then possibly down into that 195, 196 area. And then below there, it's fair game all the way down to that 180 to 183 low. That it doesn't look very good for BNB right now. In fact, momentum's pointing to the downside on any closes below 210. Strong move down. It's a trend, a little bit of an uptrend on momentum here, and then it's a trend shift, so lower high, lower low on momentum. Of course, this is also reflected in this just making lower lows on the daily, and lower lows and lower highs. It had a chance on the higher low here and the higher high up here on a close, but couldn't break above the wick high there at 221.30, swung it, and then right back down to the other side. If it catches its bid here, probably looking better than not when looking at the weekly. So the weekly is currently pivoted at 206.75 or 74.75. It's still bearish neutral. It's strong bearish, whatever you want to call it, until it starts closing above there on the weekly. Weekly is also coming right into the zone that I pointed to the downside here for the lower second. It's currently at 188, so there's your 188, 190. If it does breach 190, 195 to 196, and you're looking at that lower second. If it starts closing below there and breaking down below the 183 wick low, well, it's a bit of a drop. Just a bit of a drop. I would say that level will probably be pretty heavily defended by the bulls. And by bulls, I mean CZ. So that would be the zone that I'd be looking for. If it breaks down on expansion on the weekly, it's so critical. It's in such a critical area on the weekly, though. If it dips down there, it might end up being a really good opportunity. It's also so close to its freaking pivot right here, man. And if this thing picks itself up off the floor on the weekly, its momentum pivot is going to throw a nice big bull div. Got lower low closes on price action. It would be in higher low territory for RSI. That'd be a pretty decent bull div right into this support's going all the way back to 2021, so be a macro long-term support. So if it holds up, it's more likely to hold up on first pass anyway, probably for a decent bounce, unless something happens, Binance goes under, something crazy happens in the overall economy, And, you know, I'd favor more of a bounce from this area than not. Daily's ugly as hell. Weekly is saying hold your horses. What does the monthly say? I need to see the monthly. Yeah. Monthly is saying that it could even swing those lows by the lower second at 175. And if it catches a bid there and comes right back into range before the close on the monthly, then that would be a decent buy as well, for at least the lower term time frames, not financial advice. But if it starts to break down below there, we're probably looking at all of crypto nuking at that point. So, I mean, yeah, it's ugly, man. So freaking ugly. It's not a typical distribution pattern, but if it turned into distribution, I would not be surprised. It's in fact an accumulation. I would want to see the lower low to higher high rejection. We're not really seeing that. You know, we do have the lower high, so we have downtrend in structure, downtrend consolidation, but you're going to get, look at the bull flag. Look at the bull flag. It's going to go to the moon. In fact, I mean, that, to be quite honest, this thing has just been bull flagging its way up to the moon anyway, to be fair. But if you really wanted to get funny with it, just go from this last wick low to the high to the consolidation low. Turn on fib based on log scale here, and you've got moon coin. You've got just 100% is $22,600. Do I think that that's realistic? Not really. But yeah, I mean, it's ugly as hell on the daily. It's got a chance on the weekly. It's got a chance on the monthly. It is still pressured down on the monthly on closes below 296 still. It is a long ways away from there. So it does, yeah, it does look, I agree with your comment that I just read, which is it looks like a dead cat bounce if it gets down there. It does, yes. Unless the monthly starts to turn. Like if it's a decent October for markets in the back half and it starts to bounce out of those areas and turn the monthly specifically, I'd be looking up more than down. But if this thing starts breaching 183.40, it's over. As long as it's, you know, if it's getting expansion without a reclaim, you know, or a deviation, then it's pretty much over for a while. Probably see Binance in a really tough position there too. So I'm sure that you'd see all kinds of news. So yeah. Do I have any questions from the guys at the prop shop over there? Oh no, you guys are cramming for exams, huh? Okay, cool. Well, I'm glad you showed up anyway to hang out and support this this probably overly long and boring live stream for some of you guys, especially if you already know exactly what I'm talking about as we had met this morning. So, but yeah, thanks for hanging out, guys. I appreciate it. Anybody else in the other various chats here? Thank you for testing out the Discord as well. Jimmy and Jer. Cool. Yeah, we're still working on Discord, so I haven't fully given up on it. Solved a few problems, but we'll see what happens. Let's go ahead and take a look at this downside move for open interest. We'll take a look at Bitcoin real quick on open interest and funding for the moment. You can see that this is all just positioning as it stands right now. Nothing is broken up or down. But on the move to the downside, we saw open interest. We saw open interest basically come down. Or go up, rather, I'm sorry. After an initial spike down. So we see open interest was kind of flat along the weekend price action here. Get a little bit of OI washout, and then it builds back up, and on the move up it spiked all those shorts, all those breakdown shorts, and washed them out. So we had weekend. We get a little bit of a lower high in open interest. Bulls get washed out below the wick lows there of that smaller, tighter consolidation range. OI builds up again, and then shorts get wrecked. So it's pretty typical Monday price action, to be quite honest. Let's look at funding. We're going to go down to the 15-minute and see what funding's looking like. Funding's positive. Not too surprised by this after the shorts getting wiped out. Bears tried to take it there. Yeah, funding's remained positive all the way through. So it hasn't really shifted aggressively except for OKX on coin margin contracts, which is likely collateral for options. I don't quote me on that, but it's likely collateral for options. So we're probably seeing some options fills pushing OI up on a hedge position on the other side due to what's going on in the world right now. But yeah, I think that's going to do it if nobody has any questions. Yeah, just watch 27.2 to 27K. If we do see no high put in here, it's still just a consolidation zone as it stands right now, and then we come back to it later. Kind of like how the lows consolidated and like could break up, and then it just broke down. We could see the inverse happen as the setup is supporting that on the longer term time frames, where we saw this consolidation on the lows, a little bit past the lows here. We're seeing consolidation in and around this high and this high here, and then it could just rocket itself right on through to the upside as the weekly is painting that picture as it stands right now, provided 26K holds up through the end of this week. So again, 26K is the weekly momentum pivot. And yeah, I think that's going to do it. Cool. All right, so yeah, sorry, Bobby. I guess, yeah, it looks exactly like PNB. Yes, it does. ETH doesn't look very good either. So we go back to that on Wednesday. I want to see kind of how the rest of today plays out into Tuesday. And on Wednesday's live stream, we'll take a look at everything. We'll look at stuff like ETH and some other alts. I might even take some more requests. So get your list in order for what you would like to see. But I'm going to tell you all, please have a good morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and more importantly than all, stay safe, no matter where you are in the world. And with all of that said, we're going to get into the outro stuff here. I will have a Bitcoin in 60 seconds video, of course, up later today. It will be a normal daily video this Friday and Sunday. I posted weekly videos on that shorts feed. So if you would like to support me, liking, subscribing, all that good stuff, but more importantly, turn on the bell for notifications, because those shorts videos get buried pretty quickly. If you can't find them there, you can always find it over on x.com at CryptoLandy. Links are in the description to all that stuff. All right, you guys take care of yourselves, and I will talk to you very soon. Landy out.